Good morning or good afternoon, depending upon where you're located and depending upon your time of day. I want to thank you all for joining us here today. I am Eric Ellman, Senior Vice President for Public Policy and Legal Affairs at the Consumer Data Industry Association. And this event today is yet another in our ongoing series of webinars, teleseminars, and other programs that we provide to the consumer reporting ecosystem, consumer reporting agencies, data users, data furnishers, to help better educate them and us about issues and ideas affecting, impacting the consumer reporting industry. And today we're here to talk about home ownership. We've got a home ownership roundtable to discuss. With the rise of inflation and increased housing demands, the cost of living and home ownership has increased significantly in 2022. The Biden-Harris administration's announcement in May outlines a number of federal actions to close the housing supply gap and to increase fairness in the rental and the housing market overall. Yet while home prices and mortgage rates continue to adjust and oftentimes upward, there's still significant uncertainty in the mortgage and the homeownership landscape. As a result, consumers are left wondering what they can do to help better prepare themselves for significant milestones like homeownership, and perhaps one of their most significant milestones, certainly their most financially significant milestone. Today, we hope to inform consumers and others of the current housing mortgage market and equip consumers in particular with guidance that they could use for themselves and their friends and family on their homeownership journey. We've got an amazing panel of experts here today from the 3 nationwide credit bureaus, and they will provide more insights into the current landscape and the ways that credit reporting agencies are supporting consumers. So without further ado, let me make a couple of quick introductions to my 3 esteemed guests, starting first with Jennifer Henry. Jennifer is the Managing Director and Chief Strategy Officer for Government Credit and Capital Markets and Housing Strategy at Equifax. That's a big title. That's probably a little hard to fit on your business card, but it speaks to the wealth of experience that you have, Jennifer. Jennifer is the Managing Director and Group Executive for Government Credit and Capital Markets and Strategy at Equifax, as I just mentioned. She brings more than 20 years of experience to her position at Equifax, including operations, technology, marketing, sales, product management, the list goes on. Before her position at Equifax, she held leadership roles at First American Mortgage Solutions and at Fannie Mae. Next on the list is Susan Allen. Susan is the Senior VP and Head of Mortgage Product at Experian. She is responsible for developing and executing Experian's mortgage product roadmap to unlock the modern mortgage for all consumers. Try saying modern mortgage 3 times fast, 10 times fast even. Experian Mortgage leverages the power of data analytics technology to create solutions for businesses and consumers. Prior to joining Experian, Susan was responsible for mortgage analytics and evaluation products at CoreLogic. Earlier in her career, Susan served as the risk management executive as a risk management exec at Chase, at GMAC, at US Bank, and a variety of others focused on mortgage, credit card, and commercial lending. A patented inventor, and how cool is that? Susan has been named Housing Wire's Women of Influence and to the Progress and Lending list of the most powerful women in fintech. Also pretty cool. Next, last but not least, is Sumit Gambhir. Hopefully I'm pronouncing that mostly correctly. Thank you, Sumit. Sumit is the Vice President of Mortgage at TransUnion for TU's US Market Division. In this role, Sumit leads marketing strategy for TU's mortgage business. His purview includes developing strategy and the product suite. Before joining TU, Sumit was a management consultant at McKinsey & Company. So thank you again, all of you, for joining us, Susan, Sumit, and Jennifer. So let me first offer a kickoff question to this group. How has the mortgage homeownership landscape changed within the last few years? And that alone could probably take an hour, but we'll try to keep that short. But how has the mortgage and homeownership landscape changed in the past few years? What are the important evolutions and changes that are impacting consumers today? Anyone that wants to dive in, have at it.
I can start.
Please.
And the quote that rings very well in my head is one of my customers said that the average age for first-time home buyers that they are seeing has gone up by 10%. And that for me sums up the theme for first-time home buyers, especially in the last 2 to 3 years. The pandemic delayed home buying for a lot of folks. So a lot of people delayed their home buying process for a variety of reasons, not just because of supply being low. I mean, that was a big factor. But what's happened is also that a lot of consumers or homeowners that have mortgages have such good rates now. 80% of consumers have a rate below 4%. So not a lot of people are moving because they want their mortgage locked in at that rate, and there's no incentive. On top of that, home prices have gone up. And as that continues to happen, a lot of consumers that were saving up for their dream home either have to compromise on what that dream is or potentially extend their savings target. So in the last 2 to 3 years, we have seen a boom in the mortgage industry, maybe except the last few quarters. But it's been a great few years for loan originators focused on refinancing. And slowly everyone is pivoting to purchase mortgages. But where I think the evolution is eventually going to result in some sort of a benefit for the consumer would be when those consumers are able to start seeing some light at the end of the tunnel, where they can start seeing more houses in the market, which currently they don't. And as a result of which, I think they need a lot more help, not just from the credit furnishers, but from loan officers and the entire industry in general.
Great, thank you, Sumit. Any of you, Susan or Jennifer, anything to add?
Yeah, I would say that, from my perspective, the landscape for homeownership has changed a lot with the technological advances that are available. For the consumer, the overall experience of getting a mortgage has improved because of the fact that the lenders have easier access to the data that they need, like credit, asset, income, employment verification. So the borrowers do not need to provide as much documentation. So I think we see that that is changing in the mortgage landscape. In addition, what we're seeing is that the entire industry is rallied around providing equitable access to homeownership for all, particularly in minority and underserved segments, as well as with the millennials and the immigrant populations that have thin and no access to credit, but they are actually ready for homeownership.
Got it. Thank you. Susan?
Sure, I'll jump in. I think one of the things that's interesting when we talk about the mortgage industry is sometimes the averages skew a little bit what's happening in different subsets of the population. And I think especially when we're talking about equitable access to mortgage and housing, it's important to understand and look at the different segments. I think when you look, for example, at housing starts have been impacted, as Sumit was mentioning. We had some inventory issues, but the construction that is happening as it's rebounding is not happening in the affordable housing sector, right? It's happening much more in larger, more expensive homes. We saw for the first time rental and multifamily housing starts eclipse single family housing starts recently. So it's important for us to be keeping in mind when we're looking at serving consumers who are seeking home ownership, that we've got good solutions across the board. I think on the positive side, there's been exceptional movement in terms of use of non-traditional data, whether that's rental data, whether it's non-traditional credit data, to try to expand access to the mortgage ecosystem, as well as an expansion in down payment assistance programs and programs offered by different, Fannie Mae, Freddie Mac, for first-time home buyers. So I think, especially as interest rates, when, I'm not going to say if, right, when interest rates start to drop, I think we've got some good infrastructure there to even better support, borrowers across the income and affordability spectrum as they're looking at home ownership.
Got it. Jennifer, you had mentioned something a moment ago that I want to take us to next in this conversation, and that's the issue of equity. And we are in the middle of an ongoing and mission critical national conversation about creating a more equitable financial system and a more equitable home ownership system. And So I guess the question for all of you is, when it comes to building an equitable path to home ownership, what role does the consumer reporting industry play on that path? And whoever wants to jump in first, have at it.
Yeah, I can take that one first.
Please.
I mean, from our perspective, the purpose of Equifax is to help people live their financial best, right? So we understand that a single financial opportunity can be a critical step to establishing an individual's financial health and generational health or wealth, while changing the trajectory for families, communities, and generations. So our role is to unlock the insights that are needed on behalf of the consumer to enable access to credit, and to be innovative to help continue to bring greater insights to the forefront to help provide more visibility into the consumer's true ability to pay. Susan mentioned, telco, utility, rental payment data, cash flow insights. Those are all things that are starting to become much more standard in the industry, and it is our job to help unlock those insights on behalf of the consumers.
Got it. Sumit or Susan?
Well, so we looked at the low to moderate income consumer population a couple of years ago, and we wanted to understand, is there any marked difference between how those consumers get access to mortgages, both for purchase and refi? But I'll focus on purchase for now for first-time home buyers. And are those differences something that the industry could, potentially design solutions around? We saw that about 90 million low to moderate income consumers that are likely renting right now, or who are not homeowners, have not had a mortgage. And that's 90 million out of a total of 150 million renters in the country. Renters or likely, non-homeowners. So a significant portion are low to moderate income. So then we looked at, do these consumers have equal access to getting a purchase mortgage? And we saw that based on the data, low to moderate income consumers are 34% less likely to get a purchase mortgage than non-low to moderate income consumers. And that was surprising to us, because when we looked at those 90 million consumers, a good portion of them were above the score of 680, right? So that was indicating towards a couple of things. One was, of course, these consumers probably don't understand the home buying process, and not just low to moderate income per se, but low to moderate income consumers potentially self-select themselves out of the home buying process. So what that means is a lot of education is needed for consumers to understand the different financing options. And is their score too low to apply? Maybe not. There could be other reasons why they're not getting a mortgage. Maybe it's not having saved up enough money for down payment. Maybe the income isn't there. Maybe they shopped around 10, couldn't afford the rate. But we actually ran a consumer survey, which actually showed majority of consumers that are above 620 feel that their score is too low. So I think there's a lot to do for the entire industry to come together and actually educate these consumers. Providing weekly access, like free access to consumers to look at all three credit reports, is a step in a positive direction, where we're making sure consumers understand their credit health. There are other aspects to it, which is the financial health and overall financial well-being for the household, that also needs to be taken care of by other stakeholders and also by us, the credit bureaus.
Great, thank you, Sumit. Susan, did you have something to add?
I do. It's an exciting topic, and one that you're hearing passion about, across all of our companies. I think actually listening to the consumers, understanding their perspective, and then building what we hear is so important. Experian went out and we with 1,200 consumers directly interviewed, did focus groups with individual consumers, and asked them, what do you think the barriers are to home ownership? And the answers were really interesting. Sumit was talking about consumer education. We heard that as well. We were really surprised to hear, specifically among consumers who identified themselves as either Black or Hispanic, checking my notes to make sure the number's right, over half, 55%, said they didn't know what source of information to trust. So we can create all the educational materials we want, but if consumers don't know to trust us, or they don't know which information is right, that's even more difficult. And so when we interviewed those consumers further, what we found is 2/3 are relying on their family and friends for information. Less than a third are coming to anyone in the industry, whether it's the credit bureaus, loan officers, lenders. So it's really incumbent upon us to do a couple things. One is build the types of tools for Experian. It's our Experian Boost and Go products that actually help consumers leverage their own data, their own consumer permission data to increase their credit scores, but then also distribute credit information through some of the trusted partners in the industry. Again, for Experian, it's organizations like Home for USA, the National Urban League, the Urban Institute, Unitos US, right? Make sure we're getting that consumer education message out via various channels so that we can really increase the likelihood that consumers who are opting out or consumers who are interested in a mortgage can get access to this great information and these tools that can help them prepare.
No, it's an interesting point that you made, and I was looking down for a moment because this weekend, yesterday, in fact, I was listening to a TED Radio Hour podcast, and there was an interesting discussion from a financial educator who talked about how they did empirical studies that showed financial education, financial literacy only goes so far. And I was looking down at my phone to try to figure out from my notes what the punchline was, like what else helps beyond financial education or financial literacy. And I don't know, Susan, if you happen to know whatever that answer might be. But what do your companies do to help promote financial education, financial literacy for consumers? Because it seems to me that this is something that should be taught in our schools, and it's probably not. It's something that should be taught in our homes, but probably not with the effectiveness that it should. Help us understand a little bit about that, if you could.
Yeah, so Eric, I'll chime in. You're absolutely right. And when you talk about, should be taught in schools and things like that, we have consumers in the US grow up with a very different set of understanding around credit, around home ownership, depending on what their families and what their neighbors, what their friends have been talking about. And there are very distinct differences, in the US in different communities in terms of what's appropriate to address, what gets talked about, right? And so that creates differences in levels of understanding. And so when you talk about what can we do, obviously, it's creating great consumer education content. It's making sure we're engaging directly with consumers. With Experian, we have a Twitter. It's hashtag credit chat. I'm sure, and if you're interested, we can all provide links to websites and links to different information. It's about creating the credit education, but we've got to go a step further and make that credit education actionable for consumers. We've got to give them the tools to be able to chart this path for themselves and actually take the steps that consumer individually can take to put them in the best position for home ownership.
I mean, I agree with Susan. I think that, the educational tools, as she mentioned, I think all of the bureaus have them. There's a wealth of articles and tools available on our website. There also, are lots of tools that are available through investors like Fannie Mae, Freddie Mac, FHA, that are from trusted sources. And I also think that one of the components that we need to focus on is educating the loan officers and the originators to be able to appropriately engage with their customers. A lot of times, in the lower moderate communities, they're going to the people in their community to get the mortgages versus going online or making the phone calls, and being able to educate them on financial literacy and helping their borrowers through the process is critically important.
Great. Sumit, did you have anything to add?
Yeah, I agree with everything that Susan and Jennifer have said. I wanted to actually highlight a couple of examples that specifically TransUnion and my team has worked on. We partnered with a company called Mobility Capital Finance. It's a Black-owned and technologically led company that focuses on bridging the gap for Black homeowners. As we all know, there's a huge gap between Black homeowners and others in the country. For Mobility Capital Finance, they created an app called Blueprint, which leverages another partner of ours called FinLocker. It's essentially a personal financial management app built for mortgages. The sole purpose of that app is to help those consumers identify what that saving goal should be for their dream home, pull in their data from the different connected bank accounts and figure out how much money do they currently have and what should be their plan to save for that home. And it also has tools like, say, the credit simulator, which all the bureaus do. We have provided that in the app where the consumer can use that tool to figure out what actions they need to improve their credit. But I also want to go back to something that Susan said. It's a very important point. Whom would you trust? It's technology can only take you so far. And not everyone is technologically savvy that they will run all the simulations, pull in all the data, pull it down in an Excel file, and figure out the right model. Home buying is such a personal decision. It impacts everyone in the household. And at that time, what you need is a community-led program. And that's what we are very proud with what Mokify is doing. They actually have a community-led approach where the people advising those consumers are actual advisors who understand the entire home buying process. And through their app, consumers get to share their weekly progress or their monthly progress with those trusted advisors that guide them on a step-by-step basis. So I think that's where we kind of need to have a combination of a high-tech and a high-touch approach. And Mokify exemplifies that for us.
Great, thank you, Sumit. You know, it's interesting, Sumit, that you mentioned high-tech, high-touch. And I'm going to use this as a segue into the next segment of the conversation on alternative data. We at CDIA, and in my capacity as the vice chair of the board of directors of Credit Builders Alliance, and all of three of your companies have really great relationships with CBA. And so CDIA, CBA, and all of your companies have been working very diligently to create an expanded financial field of play for consumers to bring the unbanked and the underbanked into the financial mainstream. And one of the paths to do that is on rental payment history, as well as other alternative data. And we'll get into that in just a second. But one of the interesting lessons that I've learned in connection with the initiative that CDI and your companies have been working on to bring more rental payment history into the consumer reporting ecosystem. About a year ago, I was chatting with a gentleman who runs a division in the DC Public Housing Authority, and DC has run a very successful but small pilot on rent reporting that has shown significantly positive results in just its first year or two. And he was telling me that because it's an opt-in system, that he would have to go multiple times to multiple buildings in DC owned by the Housing Authority to try to convince consumers to opt into this program. And he said a lot of it is a trust factor. And I think maybe all three of you at this point have said that consumers can be very distrustful, and maybe more so in the current climate in which we're in. And it takes 2, 3, 4, sometimes 5 or 6 conversations with each individual customer, consumer of the Public Housing Authority in DC before they finally check that opt-in box. And most people are persuaded not necessarily by the Housing Authority, but by their neighbors and their friends who were brave enough to be an early mover to check that box to opt into rent reporting. And they see the success that their friends and their neighbors and their family have, and so they opt in too. So there's been, I think, some very impressive, encouraging results in the field of both high tech rent reporting into the consumer reporting system and the high touch that comes with multiple conversations with skeptical tenants to get them to opt into the program. So I want to pivot to alternative data. And obviously, when we're talking about alternative data, we're talking about a variety of things, utility and telecom. Probably the biggest and most important is rental payment history. It's the biggest check that most consumers write every month, or I guess most consumers, maybe many consumers now aren't writing checks. It's the biggest payment they make every single month. So one of the things I'm interested in hearing from all of you is how can alternative data help consumers on their journey to home ownership? And I'll just leave the question as free-flowing and broad at that. And if any of you wants to dive in first, whoever wants to dive in first, have at it.
So I think that, as you said, rental payment data, cash flow insights, and then alternative data like telco, utility, and pay TV are critically important, especially for those that are thin or no file borrowers, because these insights can help build a credit history or help augment the credit history. So recently, we at Equifax announced that we would be delivering 15 telco and utility attributes with every US credit report that's going to provide a fuller picture of the consumer's financial profile for over 191 million American consumers. And these additional insights are going to be one of the many ways that we're promoting access to credit and financial inclusivity. In addition, we have a product that we're working on, and I know that most of us on the line have similar products with consumer consented data and partnerships with the GSEs that will allow for rental payment data to be mined from that, as well as cash flow that can help round out a consumer's profile as well.
Yeah, Eric, this is such an exciting time, and you again, you can see the excitement, from all of us.
I could feel it.
Yeah.
Oh, it is. And here's the kicker. This is not stuff that as a financial services industry, we have to try and see if it's going to work. We know that including non-traditional data expands the credit access in several industries. It's in play in industries beyond mortgage. We know it works. And I think when we talk about things like rental data, telecom data, it is important in all three of the bureaus. We are all aggressively seeking sources of that data. One of the most exciting developments is consumer permission data. And so for folks on, who are listening who might wonder what that means, it's when the consumer opts in and gives the credit bureau access to be able to identify payments within the consumer's account. So we don't have to wait for an entity, a landlord, especially like a small mom and pop landlord, to decide to report something into us. We can actually confirm from the consumer's payment history that they're making those rent payments. That's a really important source for us to really be able to, to scale that. Jennifer was mentioning some of their programs, at Experian. This is what Experian Boost does. It basically permits consumers to, to sign in, and within a couple minutes, the consumers can leverage that, that consumer permission data and actually boost their scores. Millions of consumers have gone in and boosted their credit score, leveraging that consumer permission data. So it really gives, the power to the consumers to also impact how they're approaching the financial services industry.
I'll add saying that these solutions are timely and absolutely needed. And all of us are working on our own products and initiatives, but they are with that same objective in mind, because you have to have a multifaceted approach. Yes, you would want consumers to give you consent, but you also want to work with property managers so that they can actually start reporting trade lines. There's a clear benefit. Fannie Mae, I think, published a study where they said 17% of consumers could have potentially been approved or could have been eligible had their rental payment history been reported. There's definitely clear benefit in one of the largest lending asset classes, mortgage. So there's absolutely benefit in other asset classes as well. But I do want to go back to this point where the solution is timely and needed, because when we looked at our data between 2017 and 2019, the number of consumers that don't own a home, that don't have a mortgage, we call them likely renters, that grew at a steady pace of 1% between 17 and 19. Between 19 and 22, that grew at 4%. That means a lot of consumers, as I was saying earlier, that's what I started by saying, a lot of consumers have delayed their home buying process. They still don't have all the options available in front of them where they can easily select, as Eric, as you were saying, they do need encouragement to go and basically check the checkbox saying that please report my rental payment history. But a lot of consumers don't even know that's an option, right? So it has to do a lot with Fannie Mae is making, I'm pretty sure Fannie Mae and Freddie Mac both, but Fannie Mae made the right step by announcing that, hey, rental payment history does help a consumer. And they already have programs where, to what Susan was saying, if a consumer provides consent, using their bank transaction data, using the cash flow data, you can identify rental payments. And that really can help a lot of these consumers get to market quickly. And maybe not everyone will qualify for a GSE loan, but they can get started on building their credit history, because that's an issue for not just low to moderate income consumers, but a lot of immigrant consumers like myself who moved to the country a few years ago and wanted to build credit. I knew I was a good consumer, but it took a lot of time to convince a lot of folks to give me a credit card, give me an auto loan, give me a home loan. So these solutions really help a lot of consumers across asset classes.
Yeah, I'm sorry,
Eric,
Jennifer, please.
I would say that with all of the products and solutions we all are working on individually to help fill the gaps, I think it's still critical that we continue partnering with organizations such as yours, the GSEs, the homeownership coalitions, the local municipalities, and try to get that data added to the credit report itself. I think it's a multi-pronged approach that we'll continue to lean in on both sides. But if we can get the data, more data reported from a rental perspective, then we can, provide that data with every credit report and help with the financial transactions, not just mortgage, but a person's financial transactions overall. So we'll continue our partnership with you all to make that happen.
Yeah, I love that. This is my I'm sorry, Sumit, go ahead, please.
I just wanted to, I can't stress that point more. It's at the end of the day, lenders rely on the credit report as an objective measure of risk. And getting those trade lines reported to the bureaus, not just rental, is a necessity in the industry.
Yeah, the thing I love, or maybe let me rephrase, this is, I think, my favorite part of the conversation, because I am so passionate about creating a more equitable, more financially inclusive credit economy. And I know that all three of your companies are significant players in that space, and that's part of your mission and your vision as well. And I know that your companies and CDIA and some others have been working to bring in more alternative data, rent in particular, and that will, I hate to use the word literally because my kids use it all the time and often at the wrong time or for the wrong reason, but this will literally open doors for millions of people. It is a key into the home ownership process, which is, I think, still by most measures, still considered to be the American dream. So I really applaud that the efforts that your three companies are doing, that CDIA is working on, the GSEs and others. So congratulations to all of you. And I know that we're still just getting started and the best is yet to come, but I think we're on a really nice path, and I really appreciate that very much. One of the things that is helpful for consumers and others to know is how to prepare for the ongoing changes in the housing market mortgage landscape. What resources are currently available for consumers to help them as they are interested in getting their first home or their next home?
Gosh, I'll kick off, but TransUnion, Equifax, Experian, we all have, solid consumer education content, us through our website and mobile app. I'm sure, TU and Equifax can speak to that as well. I think I would be surprised if the gap is that there aren't enough articles out there. There aren't enough simulators out there. There aren't enough, how-tos and top 10 must-dos and top 10 biggest mistakes. And, there's a lot of content out there. I think our big challenge is to make sure that content gets in the hands of consumers and that consumers understand whom to trust for what. Right? Where do you get information about credit? Come to the credit bureaus. Where do you get information about loans? Shop for a mortgage, right? Talk to different loan officers at different types of entities about different loan programs. Talk to different real estate agents. So there's a plethora of information out there. Again, we're happy. I'm sure all of us are happy to give you links to different, sites and downloadable, tools. But the advice to consumers is definitely ask people who are knowledgeable in the industry.
Yeah, and I'll add that a lot of these consumers who are especially first-time home buyers, have pretty stiff competition because of the limited supply. But the competition is coming not just from your all cash buyer. The competition is also coming from those consumers who can afford the multi-million-dollar homes, but they potentially have to go down a level and then get to the next level of homes, which the first-time home buyer would go for, potentially. So the first-time home buyer, when they put in an offer, they are very nervous. I remember I'm pretty sure most of the folks, when they put in their first offer, are not sure what's going to happen. What really is needed, and this is what all of us, all the three bureaus are also playing an important part in solving for, is how can we make sure we get that first-time home buyer be equivalent to an all-cash buyer? Can we get their mortgage underwriting and process started in parallel when they start shopping, where you don't have to go through a long closing process of up to 60 days? Can we help close your loan much faster by pulling together your data upfront in the funnel, so that when you submit an offer, the buyer feels more confident in you than they would with someone who they believe would take up to 60 days to close? So there are a lot more technological solutions that can help, but along with that comes, again, go back to what Susan was saying, the trust of, do you know whom to go to and talk about these things? Do you have the right resources? Do you have the right real estate agent? Do you have the right loan officer? And are they doing everything they can to make sure that when you are competing in the market, you have your best offer with what you can afford, and you clearly understand the process in detail? That's, I think, probably something that will really move the needle for first-time home buyers especially.
Thank you, Sumit. Jennifer or Susan, did you have anything to add?
I would just say that, you asked like what a consumer can do to prepare. I think, first of all, make your payments on time, whatever that is, right? Make your payments on time and do the right thing. But just educate and arm yourself, as everybody else is saying. Come and get your free credit report, understand what's in your credit, understand what your lender is going to see, right? In the process, and arm yourself, with that knowledge. And I think, just to highlight everybody else's point, everybody wants a house, nobody wants a mortgage, right? It tends to be an emotional process. And, we need to continue to help educate consumers that a mortgage is a product, just like any other product. It's just a financial product. And as you would research a car or a vacuum cleaner, you need to make sure that you're doing the right research, you're getting the right education before you move forward with that purchase.
Right. Great. Thanks. Susan, did you have anything to add?
Nope, I don't.
Okay. Let me just make a couple of comments and then we'll move on. But Jennifer, your point on paying your bills on time is spot on. I probably, like all of you, run into people all the time in my social or professional life, and people ask me, how do I get a better credit score than what I have now? And there's no real easy answer, and sometimes it's easier said than done. But the best advice that I can give, and maybe all of you as well, is to pay your bills on time, over time. That's really the only thing, if perhaps the best thing to do to get a consumer score to increase over time. And then the other thing, of course, is checking your credit report. All of you had mentioned that. And that, of course, is the annualcreditreport.com. And of course, through the generosity and consumer forward thinking of your companies, consumers can now get one free credit report per week through the end of this calendar year, which I think is a pretty good deal that a lot of consumers take advantage of, and hopefully more will do that. And the other thing that I advise, and probably all of you as well, in fact, I was talking to a reporter just the other day about this very thing, is that maybe people don't give themselves a financial checkup as often as they should. We are encouraged to get annual checkups with our doctor. We are supposed to take our cars every, 6 months, 6,000 miles for an oil change. We have home inspections, and we look at our roofs and our leaks in our house. And I think the same is probably true for our financial health. And everybody should take a regular financial checkup in terms of looking at their credit reports, seeing if there's things that they don't understand, contact the credit bureaus. And if there are things that don't belong there or aren't quite right, you can dispute those pretty easily with your companies as well. I think those are some of the great tools that consumers could take advantage of. I don't know if any of you had anything to add about that, but I'm happy to keep the conversation going with a different subject if you don't have anything more to add there. All right. So one of the other questions that I wanted to talk to you all about today was we talked about some of the things that consumers can do to prepare themselves, but maybe the flip side of that coin is what are some of the bigger mistakes that consumers make when preparing for a mortgage application? And on the other side, what are the most important steps that consumers can take in terms of purchasing a home? We've checked the credit. We've all mentioned, I think, checking your credit report. I know when my wife and I bought our first house 25 some odd years ago, we got really lucky in that the house that we were buying, the couple was coming out of a divorce and they were more interested in getting out of their marriage and getting out of their house. So we got a good deal, but not everybody has that fortune or misfortune. So what are some of the bigger mistakes and what are some of the more important steps that consumers can take to gear up for home ownership?
Well, I think, Eric, you mentioned an important one, which is to really pay attention to the home that you're buying and think about it's not just the price of the home, right? What's your commute time going to be with that home? If you have kids, what are the schools like in the area? What's it going to cost you to maintain that home? When it's time to sell that home, what are realtor fees, right? These are things, especially for first-time home buyers, it's important to understand because you're not done once you get the mortgage and move in. That gets you to the starting line, and it gets you to a really awesome starting line where you can benefit from home price appreciation and all the rest of that. But there's definitely a different set of obligations when you're a homeowner versus when you're renting. So I'll start with that and kick it to my colleagues for some other comments.
Well, I'll say that I think the biggest mistake people do is they try to time the market. Like, what's the right time? Like, can I buy it at when the market is down and sell when it's high? And whenever people ask me, because they know I work for a bureau, they know I've been in the mortgage industry for a while, I say it really doesn't matter. The right time to buy is when you want to buy and when something is available. So as consumers think about when is the right time to buy, don't read those reports that talk about how homes are appreciating or depreciating. Just know that you need a home. Let's figure out why you need a home. Identify whether you have the means to achieve that home and afford it. Because for a lot of consumers, that's the largest purchase they'll ever make, and they probably might not even move. So you have to be comfortable with where you're going, with the goals in mind. And I know a lot of people are fortunate where they can think about, okay, maybe this is a starter home and I move out in a few years. But don't try to game the system unless you are someone who's in the market as an investor, as a fixer or flipper. If you are looking to buy a home, identify what your family's needs are, what your personal needs are, and build a goal around it. Then wait for the right opportunity. And of course, it has to work out to all the points that Susan mentioned. Is it close to your kid's school? Is it close to your commute? All those things come in once you realize that what your goal, your objective in buying the home is. So have that clear in your mind.
For some people, Sumit, the house that you're buying might be too close to your family, and maybe you want to move further away, right?
Possibly, yeah.
I mean, it depends. I mean, there are some people some people in my family I might feel that way about. Jennifer, did you have anything else to add?
No, I think my colleagues have covered it well. Thank you.
Got it. Good. I didn't have anything else on my list to ask, but I'm certainly happy to keep the conversation going. If Susan, Sumit, or Jennifer, if you wanted to expand on anything that we've already discussed, or if you wanted to bring up something new, I'm happy to keep that conversation moving forward.
I think when it comes to advice for consumers who are nearing and just getting into that process of applying for a mortgage, there are a couple of things we didn't cover off on, like the importance of getting pre-qualified. That's a really important first and good step. The importance of understanding if you have a co-borrower, a spouse or any other co-borrower, make sure that you're looking at both of your credit scores because those are going to be impactful. And then during the process, the mortgage process, it's important. People get excited. And so they think about, oh, I'm going to go get a new sofa and run out to a furniture store and buy a sofa on credit. And that can be challenging for it if you're in the process of getting your mortgage and all of a sudden there's a new credit account. So being aware of kind of the financial and credit aspects when you're in that process, I think is really important.
Great. Sumit or Jennifer, did you have anything to add?
No.
Okay. Some of the things I've heard on this conversation are, and all of you said some really impactful things, like pre-qualify, give yourself a financial checkup, don't game the market, don't time the market. The best time to buy a house is when you're ready to buy a house. And I think all three of you mentioned how all three of your companies and the consumer reporting industry as a whole is leaning into ways to create a more equitable housing market, a more equitable financially inclusive credit economy through rent and utility and telecom and other payment history data. This, I think, has been a really helpful, thoughtful conversation from all of you. Susan, Sumit, Jennifer, thank you all very much. And I think we'll just close it out here. I appreciate all of your time. I appreciate your expertise. And thank you for spending the last 40 minutes or so with us today. Have a great day. Take care.
Thank you.
Thank
so
you.
much.